Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, good morning.
Morning.
Hi, good morning. There's so much to track geopolitically in terms of the developments from the Federal Reserve. And this comes on the back of a very painful week for our markets, where the Nifty was down 2.5%, the small cap index was down nearly 4%. So amidst all that noise and the earnings which are expected, how will we perform?
It's up to your IT boys.
Yeah.
IT boys and girls, Reema.
But I think they might just be overshadowed by what's happening globally, right?
Possibly.
All right, let's get straight to the action then.
Absolutely. Let's just kick it up and take it from the top in terms of what you need to know as we begin a fresh new trading session. I think, the first news item, of course, is what did not happen. And this is, of course, the U.S. Supreme Court, which was expected widely. And by the way, expectations rose as we went into the end of the week on Friday. I mean, started on Monday, Tuesday, Wednesday, and by Thursday it had reached a crescendo that, well, the Supreme Court is going to rule and they're going to strike down at least all of Trump's tariffs under the emergency IEEPA section, or is at least going to do it partly. Well, the Supreme Court did not publish its ruling, which is, by the way, also a possibility that we put out, that an opinion, but perhaps no ruling. Now, the court is likely to, but I just want to make it clear, not guaranteed to deliver a tariff decision this coming Wednesday. The point is it's coming. So it didn't happen on Friday. Will it happen on Wednesday? Are the markets ready for it? Is it all in the price? I don't think so. Even though it's widely expected, I think if the court does decide to strike it down, and if we get a decision on Wednesday, I don't think it's in the price in that sense. Not in equities or in the rates market as well. The other bit of news flow on Friday was, of course, the U.S. jobs report. And in a way, it had something for everyone, right? The actual absolute number was about 50,000 job additions. The estimate was about 70,000. But the one thing which markets focused on is the unemployment rate, which fell about 16 basis points to about 4.4%. And what that means is that the bar for Fed, as unemployment rate goes down, the bar for the Fed to cut rates perhaps goes higher. So it requires a lot more. By the way, there are 2 rate cuts priced in for this year. And I said it on Friday morning that it would take a lot for those expectations to change. I don't think this jobs data really changes that in any meaningful way. Now, on Friday, you've got the S&P 500, which ended about 0.65% higher. Nasdaq was up 0.8. 2026, it's been 10 days. It feels so much like 2025. US is right on top. It's doing exceptionally well. By the way, silver was up about 5.5% on Friday. Oil prices about 63, but they've been in a $3-4 range now, between 60 and 64. But it feels a lot similar, right? US equities, defense doing very well, precious metals doing very well, base metals at the margin, and of course, emerging markets like Korea, etc., which are also performing very well. Now, the Trump team is, and this is the other thread which I think we will see more and more of, the Trump team is pushing to address the affordability question ahead of the midterm elections. Remember, the midterms are only in November, but look at what is happening. President Trump proposed that interest rates on credit cards be capped at 10%. He said that large financial institutions should not buy single-unit family homes. He's essentially authorized MBS purchases by the government, some $200 billion worth, aimed at lowering interest rates on mortgage, that is, home loans. So, and I think there is perhaps that element of New York, what's happened in New York with Mamdani. Affordability is a buzzword in the Trump administration in a big, big way. And I think between now and November, we will see perhaps a lot more. All of this in any other period in time would have been negative for markets, right? This is government intervention into how markets work. But, well, so far markets are kind of ignoring it. At least, there's no durable impact in that sense. Well, the other bit of news flow here for us in India, and we discussed this on Friday as well, Sergio Gore, the U.S. ambassador designate to India, and more importantly, he's very much a part of Trump's inner circle, is in India now. There was a flash visit. He met a lot of leaders, including Prime Minister Modi, but now he's in India, arrived this weekend, and here to stay. And I think people like, and I said this on Friday, Ashok Malik, etc., have said that this is an important piece of the news flow which markets should not discount in terms of repairing relations between US and India. The other bit, of course, is all that is happening geopolitically. Venezuela, there is Greenland, and of course there is Iran as well. Protests continue in Iran. I mean, the level of international conflict that we have on our hands, perhaps unprecedented at any other point in time. Now, coming to markets here, severe pressure, absolutely severe pressure. The Nifty with 200-point sell-off on Friday has lost about 700 points from last Monday's high. Just looking bombed out. And it's actually even more visible in mid and small caps where there is tremendous pain. But remember, the small cap index, by the way, on Friday sold off almost 2%. I looked at the NSE 500 list of stocks. Only 40% of stocks in that basket, and that's the widest basket we have, are only 40% are even trading above the 200-day moving average. That is the Lakshman Rekha between being bullish and bearish, long-term average. But, it's an important indicator in that sense. So, mid and small caps, lots and lots of pain. With Friday's sell-off, the Nifty is now exactly at a very long-term moving average, which is the 20-weekly moving average. That number is 25,580. So that's the big support. The Nifty Bank has just broken the 20 days, a very short-term average. The Nifty Bank has just broken the 20-day on Friday, and that level is 59,412. So very tentative, very careful, and I think the only US-India will see whatever happens, and from the global side, I think it's all focused on earnings. If earnings growth picks up in the third quarter, I think, there will be bids and people would want to look at the market in a more constructive way, which has not happened for a while now. Nigel has walked across to the wall with the positioning and how is it all looking? Nigel, over to you.
Well, at the start of 2026, there were hopes that the FIs actually will lower their selling or in fact will turn buyers. No signs of that, at least in the first couple of weeks that we've seen in 2026, because they sold close to 3,800 crores. Institutions, though, that's the DI and the FI put it together, they were net buyers. What's plaguing the Indian markets? Well, one wonders, right? The FI selling is not abating. There's no breakthrough with regard to the US trade deal and also geopolitical tensions all across the globe. And there is a bit of a skirmish on our borders as well. So maybe that's weighing on sentiment out here. But last week, we were rank underperformers with the US markets actually doing quite well. What did the FIs do on index futures? Well, they went ahead and they added close to around 17.6 thousand short contracts in trade. And now the short positioning, if you just pull up a chart in the last week, it's up by close to around 50,000 contracts in the past week. You need to keep in mind that at the start of January, the F&O series, the Nifty lot size, well, that has been revised to around 65 from around 75 earlier. So effectively, we're at those peaks in terms of FI net short positions. And in percentage terms, we're at the highest we have seen all the way since October 2025. The FI's short positions at around 92.5%. Well, that's the highest we've seen all the way since the 14th of October 2025. But if you just see what history suggests, well, at that point of time as well, 10 sessions later, that's effectively between the 14th of October to the 29th of October, the Nifty actually bounced 3.6% on 906 points. The street will be hoping that with these FIs aggressively net short, what we saw recently in October can repeat itself in January 2026. That's the hope out there. And with the markets being so aggressively net short, the bulls will be really grabbing on to this data point. What happens from here on is going to be interesting, though, because the FIs, they're selling in cash market, they're adding shorts, and they're writing calls as well. They wrote close to around 3 calls for every one put position. And the strikes like the 25,800 call, 25,900 call, well, they were getting written very, very aggressively with the premium coming down as well. So one data point is the FIs are net short. The other data point that the bulls will be looking at is the Nifty PCR. That's come down to around 0.62. History suggests from these levels normally we see a bit of a bounce. So that's the other data point that will be actually favoring the bulls to see some kind of a bounce from the lows of the day today itself. Well, the Nifty levels to track, we're trading below the 20 MA, even below the 50 MA. So now all eyes on this vicinity of around 25,500, 25,550. That's going to be important. Incidentally, that's where the 100 DMA comes in at as well. The problem in Friday's trading session was that the Nifty went ahead and broke the 20 DMA. But the good news is, at least Reliance Industries, in Friday's trading session, that managed to defend the 200 DMA. And in fact, it outperformed in Friday's trading session. So I'll keep an eye out on that factor. Well, the stock that I'll be looking at post the SEBI chairman's weekend comments is BSE, because he commented on the derivatives volumes. He said that he doesn't think they need to disturb anything at this point of time. So I'll keep an eye out on BSE. He said this before as well, but maybe some kind of relief on this one. It's going to be an interesting trading session, but the PCR at the lower end and the FI net short positions at the up end, that's going to give some hope for an intraday bounce in today's trade.
Thank you very much for putting that in context. The FI sold 8,800 crore in the cash market, with the FI picking up significantly over the last two trading sessions. 8,800 crore in cash market selling in the last 5 trading sessions. Let's get to the equity calls then. It's Rajiv Batra from JP Morgan who says, despite the ongoing uncertainty around the trade deal, they expect earnings to grow further, underpinned by last year's low base, policy tailwinds and renewed economic momentum. He says their year-end bull, base and bear case target for the Nifty remains at 33,000, 30,000 and 24,000 respectively. They reiterate their preference for domestics over exporters. Meanwhile, Chetan Seth of Nomura says that the Asian stocks are off to a flying start, with the MSCI Asia ex-Japan index already gaining 3.5% in 2026 so far, driven by solid gains in the AI-themed market like Korea and Taiwan. While the AI have-nots like India and parts of ASEAN continue to underperform. They expect this positivity trend to continue, at least in the early part of 2026, and they expect the MSCI Asia ex-Japan index to hit 1,035 sometime in 2026, and that is an upside from the current spot levels.
Okay, well, that's some opinion, and we'll have some views coming in just a bit. But well,